Okay, welcome back, everyone. This is obviously the first major hurdle in 2024. We are going to be talking about the NFP numbers, and a very interesting one tonight. So yeah, probably something new. See the camera shifted to the left right now, but we'll start with news trading session number 1, which is non-farm payroll. My name is Vida Njaro, and just to give you a little bit of an update into our schedule for the rest of this month as well in terms of the news trading session. The next one is actually going to be on Monday. That would be on the theory side. So I would welcome a lot of you guys that are probably new and haven't been following how we actually trade news the past year. Right now, it's nearly 1 year now. You should be attending the Monday session just to figure out how we actually navigate through this. On Monday, we typically have a lot more time to talk about what's going on in the market in terms of how you should actually prepare yourself to trade news. And then on Tuesday, which is on the 12th, we'll be doing our live CPI numbers. Okay, so very interesting. Okay. All right, let's get started. My name is Vida Njaro. Let's get started with the non-farm payroll numbers for tonight. Overall, it's the U.S. employment numbers. All right. Just a quick disclaimer, any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risks due to high volatility. Market reactions to news can be swift and unpredictable, which leads to high trading risks and delays in order execution. Be attentive when determining the volume of your transactions and consider all possible risk factors. All right. Obviously, as per usual, we are going to give you that promo code TW deposit bonus. So it's actually a code that's valid for 2024. So you might actually want to save it. You can actually use it to W deposit every time you deposit into your Octa trading account, as well as to access to the private Telegram channel. I know a lot of you probably have access to this already, but if you're new and you registered through email, you should be receiving this access on your email. Okay, so yeah. My name is Vida Njaro. For those that are new, I've been a full-time trader for over 20 years. So 20 years as a full-time trader. In terms of trading, it's more than 20 years. I've been a professional trading coach and technical analyst since 2007, expert in Ichimoku Kinko Hyo technique. I'm also a director of Zanifix, an independent market consulting company. I've also been invited as a guest speaker at Trading Investing Expos across Australia, Invest Fair in Singapore, as well as the ATA and the APTA conferences, which is the Australian Technical Analysts Association and the Australian Professional Technical Analysts Conferences. Okay. Very easy. As per usual, we're going to get through some of the theories. For those that are new here, it's also still good to kind of remember the basics there, because one of the numbers that we are looking at, it's pretty much exactly on the dot with 200,000. And what does that actually mean? We're going to go through some of the basics here. So we're going to go through the theories first, and then I want to show you how we are actually going to be expecting the NFP trades. And then the hardest part would actually be explaining the potential scenarios maybe 10 minutes before we actually place our trades for tonight. Okay, and there's a lot to talk about tonight considering the current situation in the market. Okay, so this is a code that you can use as Nonfarm 2024. So again, the code is valid until the 31st of December 2024. So you can actually save this code and use it whenever you wanted to deposit into your trading account. So the code again is Nonfarm 2024. Okay, so let's start with what is or who is the Bureau of Labor Statistics. So the Bureau of Labor Statistics, or BLS, is basically a federal agency that collects and disseminates various data about the U.S. economy and the labor market. It also, its reports also include the Consumer Price Index and the Producers Price Index, which is actually going to be released next week, and another major events for the month, obviously. Before we have the FOMC meeting, which is on the 20th of March. Okay, so we're going to get all the information before the FOMC meeting. Okay, so both of these that's going to be released, the CPI and the PPI, are considered important measures of inflation. In fact, we actually measure inflation through CPI. So within the labor market data, the most interesting aspects are obviously the number of people employed outside of agriculture. This is what we call the non-farm payroll. As well as the unemployment rate. Now, I'll pause here for a little bit. You guys probably heard that there was actually another non-farm payroll that was actually released earlier, which is the ADP non-farm payroll. The ADP non-farm payroll, if you guys are new and you don't know what it is, it's actually data that's produced from a private company, right? ADP is actually a payroll company. So it's actually going to be very different to the NFP numbers that's actually going to be released by the BLS. So officially, the BLS number is the one that's going to be representative of the US job markets, okay? So at the beginning of every year, the agency basically publishes a calendar with release date for the entire year. Unemployment data is also published every first Friday of the month, but if it falls on a holiday, publication is usually postponed to the following week. And for March, we usually have this on the second week just because the month of February, we kind of have that weird month where we just don't have enough weeks for February, okay? But yeah, this is what happens. But typically, even for releases that kind of falls on Good Friday, we still get the NFP release on Good Fridays. Good thing that Good Friday happens on the 29th of this month. Time really flies by. All right. Inflation data, CPIs, PPIs typically published on the following Wednesday after the labor market data release. For this month, we're actually going to get it on Tuesday, which is on the 12th. So there's a little bit of a shift up in terms of dates for March. Okay, so what is the non-farm payroll? The non-farm payroll is basically a monthly report that's released by the BLS. Measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, and non-profit organizations. Market analysts and investors usually look for NFP figures above 200,000 as it's seen as a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. And this is why I actually answered some of the earlier chats from Alvin that tonight it is actually not going to be an easy one. It's actually going to be one of the toughest. I would assume this is actually going to be the toughest economic first major hurdle. I wouldn't say this is going to be the toughest for the whole years, but right now until the month of March, we had it easy in January. We had it super easy in February. March is actually going to be the first month where we are actually getting a little bit anxious on the release for the NFP number. And to give you a little bit of a context, what's unique about the current situation is that you can probably look at gold being at the all-time high. That's obviously number one. The stock market is also very close to the all-time high, and we actually see a little bit of an upsy-turvy, I would say. Last week, we had a strong rally in the equity market. And then this week, we saw a huge fall in the US dollar. Number one, obviously, is pressured by the Japanese yen in terms of how the Japanese yen is actually going to pivot away from their monetary policy. But also, if you take a look at the reaction in gold, there are growing concerns in the market. And I'll just give you the context on where we are right now in terms of the economic cycle. Which is a separate webinar that I believe we have actually done. You can actually find it on the channel, but we are actually in the peak. If we take the US economy as a point of reference, we are at the very peak of the economic cycle. What follows next is obviously more of a contraction, and we associate contraction with a little bit of a recession. So that's something that we should be wary about. This is something that we should have under our subconscious as we go through and navigate 2024. All right. I don't really like something being at an all-time high. It really puts us as an analyst in a very tough decision-making process because it's very hard to define where's the potential move. All right, because we don't have previous reference point. Okay. So that's the NFP numbers. So the NFP number, again, is a crucial indicator of the state of the U.S. labor market and can significantly impact financial markets. A figure that falls below market expectations may be viewed negatively, while the one that exceeds expectations may be viewed positively. And again, we need to talk about the context. From the previous releases, what can we actually expect? Previous releases normal, or are they not kind of normal? Okay. So NFP figures are definitely closely watched by traders and investors, mainly traders, right? Because traders basically need to kind of work around the volatility that's actually going to be released and take advantage of that. particularly in the forex market, where currency like the Euro USD, dollar Japanese yen, dollar Canadian, dollar Swiss, pound USD, anything that has to do with the US dollar tend to exhibit high volatility in response to the report release itself. Okay. Right. And also, before we move on to the next slide, just want to clarify one thing in terms of how we actually look at the NFP numbers. No matter what the number is, let's say we have an expectation of 200,000, even if it drops to 150,000 below expectation, it is still a gain in the employment market, right? It's not all of a sudden, oh, we just lost, how many 100,000 a job per month. No, this is actually the number of jobs that's actually not from the farming sector that's added into the job market itself. Okay, so if we have previous number at 353,000, if we have a release of 200,000 in the past 2 months, the U.S. economy has gained 553 new jobs that were added into the economy. Okay, so it's not something that takes away the employment. Okay, it's not going to, if it drops, it means like the unemployment has to jump up, and this is where it gets a little bit funky, because there's obviously another part of what we're going to be looking at tonight as well. Okay, which is the unemployment rate. So the unemployment rate is basically calculated in percentage, and it's published at the same time as the NFP numbers. The unemployment rate represents the proportion of the labor force that is currently not employed but is capable of being employed. So the U.S. unemployment rate is actually determined through a survey of approximately just 60,000 households. How many millions of people in the U.S., and survey is conducted from a sampling of just 60,000 households. So, something to consider as well. So according to the U.S. Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria. Number one, they must be without a job. They must have actively looked for a job in the past 4 weeks. They must be available to start a job if offered one. Now, if a person doesn't meet this criteria, they're not considered unemployed for the purpose of calculating the unemployment rate. So, every week on Thursday and on Wednesday, or during NFP weeks, we basically have the U.S. weekly unemployment claims. So the U.S. weekly unemployment claims are basically where the sampling is taken from. Okay, because you need to claim, for you to actually be considered into the 60,000 households, theoretically, you would need to apply for the unemployment benefits to be registered and understood that you don't have a job, and you are actually looking for a job. And if the department offers you, hey, we found a job for you, is available, even if you don't like the job is offered to you, you kind of need to take that job. Otherwise, the unemployment benefits, obviously, it's not going to be given to you. Okay, so those are the requirements, and this is where we actually start seeing a link on the unemployment claims into the potential NFP numbers, as well as the unemployment rate. More so to the unemployment rate rather than the NFP numbers. Again, the NFP number is going to be different. It's going to be the number of jobs added every month into the non-farm sector. The unemployment rate is taken from just a sample of 60,000 households, obviously, which is a number that's actually smaller than the potential gain that we could actually see from the non-farm payroll. So, for it to actually be good for the U.S. economy, the NFP number must gain. It should be above consensus, or at least it's positive, continuing to grow from the previous month, right? At the same time, the unemployment rate cannot go up for it to actually be good for the US dollar. So this is where we need to start dissecting the difference between the two. For it to actually be good, we want the unemployment rate to go down. We want the NFP numbers to go up. That's good for the US economy. That's going to be good for the US dollar. However, if we have a low NFP gains and we also have an increase in the unemployment rate, that's going to be bad for the US economy, and obviously that's going to link to the US dollar in terms of how weak the US dollar is actually going to be. Okay? So this is where we might actually find a little bit of a mixed data. And if you go through our NFP sessions, we have been in a lot of situations where we actually have a lot of mixed data. In fact, in terms of the NFP releases, last month was very unique. If you want to watch it, you can watch the February NFP numbers. That was actually a very unique number. I actually commented on that. And late last year, we also have a very very unique situation in terms of the unemployment rate and the NFP relations. Okay, so it's always good to review previous NFP releases that we've done to kind of figure out in terms of how actually the market could potentially react. All right. So the third one is actually going to be the U.S. average hourly earnings. I'm not expecting too much for tonight in terms of the U.S. average hourly earnings. Again, this data is actually a report released monthly by DBLS as well, alongside the unemployment rate and the NFP numbers. And this measure the average hourly earnings of workers in the U.S. economy. Data is collected through survey of businesses across various industries and encompasses both full-time and part-time employees. There's actually a lot of breakdown into the average earning itself. They even break it down by racial differences. Okay, including overtime earnings. So economists, investors, traders closely monitor this report as it can actually offer valuable insights into the state of the U.S. economy and its potential impact on inflation. Because as wages goes up, there's actually a higher probability that inflation could actually go up with it. And this is why we're not really too concerned in terms of the average hourly earnings for tonight's release, because there's a lot more focus on the unemployment rate as well as the NFP numbers. All right. So when trading based on the U.S. average hourly earnings data, traders often scrutinize changes in the wage growth rate compared to the previous month, as it can signals in the labor market and again potential inflationary pressures. If we're looking at signs into where the CPI number is going to be on Tuesday, yeah, we need to consider the U.S. average hourly earnings as well. Does this has an impact on the initial release for tonight? When how the market moves during the news release? Probably not. Okay, but it will have a lingering effect if the number is way above consensus. Okay, so that's something that we need to consider as well. Okay. All right. Higher than expected wage growth may indicate potential inflationary pressures. Again, as I explained, which can result in higher interest rates and currency appreciation, because we would have that wage push inflation, which is part of cost push inflation as well. Conversely, a lower than expected wage growth rate may indicate weaker inflationary pressures, which may lead to lower interest rates and currency depreciation. As with any economic report, it's important to consider the broader economic context and other indicators when trading based on the U.S. average hourly earnings data. Again, this is more on the lead up to potential inflation. So the logic is, if the wages goes up, people is actually able to spend more, and that could be a risk to inflation, because if people spend more, inflation is actually going to pick up again. And that's the reason why there's actually the higher interest rates, to discourage people from actually spending and actually save that money instead. Okay. All right, so we're gonna go through some of the strategies here. I'm not looking at the chat now, but I will in a minute. Because we kind of need to rush a little bit. So pre-NFP trading, you can actually trade before the NFP release, but that's not the main focus for tonight. The main focus is actually going to be the straddle strategy. So this involves placing two pending orders, a buy stop and a sell stop, which is above and below the current market price just before the NFP release, and we'll do that in the next 5 minutes. So we need to go really quickly because I need to talk about the potential scenario that could actually happen. All right. So what we're trying to do is actually we're trying to cage the market. So if there's a breakout during news releases, we already have an order in place. So by the time it starts moving, some of the orders should be triggered. Worst case scenario that could happen is that both buy stop and sell stop orders actually gets triggered. And this is what we call the worst case scenario in news trading. We have that whipsaw. It means we're practically hedged with a loss, right? So that's the worst case scenario. Hoping that doesn't happen for tonight as well. Okay. All right, I'll go through the number 3 and number 4 after the release, but typically we look at post NFP release. Sometimes the market just fade back to the original position before the breakout happened. But yeah, something like this, where we actually see the market breaks to the upside, and then eventually it'll come back to the range before it breaks out. This is the fade that we're going to talk about after the news is actually going to be released. All right. I've got about 5 minutes here. I want to talk to you about the numbers tonight, so you have a little bit of context into what could potentially happen. So let's take a look at the NFP numbers. The NFP numbers, the previous number is at 353,000, right? This was unique because this is actually January's number. The previous number is actually January's number. Tonight's number is actually going to be February's number. And the December number was actually pretty high. The NFP was at 330,000. And then on January, it adds up to 353,000, which is, if you were not around for last month's NFP number, it was actually double from the number of consensus itself. Consensus was 180,000. We got 353,000 last month. Okay. So for the month of February, we're looking at 200,000. The consensus for today's release, has actually gone up. On Monday, when I published the weekly outlook, it was only at 195,000. It has now gone up to 200,000. Now, again, 200,000 is the level that we talk about. This is kind of the neutral level. Anything above 200,000 is a positive outlook. Anything below 200,000, is considered negative. But again, we need to take a look at the context. Now, what if the number comes in at 200,000? Is it bad? It might be. As an initial reaction, people are going to be like, oh, yeah, you know what? It's not as much as last month or the month before that. But you need to consider what happens 2 months prior. That was a number that was really high. In fact, this number that was at 300 plus thousand, we only saw that happen once or twice in 2023. And we actually got that back to back in January and February this month. So that was a little bit unique, right? So is it bad if the gain is only 200,000? Theoretically, no. Fundamentally, no. It's still a good sign that the additional jobs added is still 200,000, right? Is that going to ruin the US economy? Obviously not. Okay, but it's probably going to disappoint a lot of traders, and it's going to create a little bit of a panic where we might actually see the US dollar being sold really quickly. Now, the second part of the equation is obviously the unemployment rate. Now, the previous number, it has been stable at 3.7%, but it kind of fluctuates between 3.6, 3.7, 3.8. Now, consensus for tonight is for this one to be stable at 3.7%. Now, given the current scenario, there's actually 5 potential scenarios that could happen. We could have the NFP numbers higher than previous month, which I think it's unlikely, right? It's definitely a good sign for the US economy. But for it to happen on the third month consecutively, I think that's going to be asking too much. Could it happen? Yeah, it could happen, right? Scenario number 2 is that we might get the NFP just at 200,000. That might cause a lot of confusion in terms of how we react to it. But the third one is that we have this below the consensus, below 200,000. That's going to drive the US dollar down quickly. But there's always that unemployment rate that a lot of traders are going to look at as well. If it doesn't change at 3.7%, great. It makes our life easier because the market is probably just going to react to the NFP numbers. However, if the unemployment rate drops to 3.6% or even lower than that, maybe at 3.5, I don't know. Consensus is at 3.7%, no change. But if it does comes in below 3.7%, no matter what the NFP number is, it's going to push the US dollar up, okay? If the NFP is super positive, maybe 360,000, 300,000, I don't know what it is, but way higher than a consensus. But given that scenario, with the unemployment rate that goes up to 3.8% or 3.9%, it is actually going to destroy the US dollar itself. So right now, what really matters is actually not the NFP numbers, it's actually the unemployment rate itself. Is it stable at 3.7% or is it going to cause a little bit of a change? If the NFP gains, but the unemployment rate also gains significantly, that could mean there's an underlying problem with the job market. It's not as stable as what the FOMC or everyone in the market thinks it to be. Okay, so this is why it's actually kind of unique for tonight. Whether or not we want to focus on the NFP numbers or we actually want to focus on the unemployment rate. Okay. Okay, so enough talking. Let's jump very quickly. I'll look at the questions later on, but hopefully we might still be able to get into a position. I might need to go into the hourly time frame, give you a little bit of a range. And for tonight, as per usual, this is going to be very simple. We basically want to create a buy stop. If you want to know how to do it, join Monday's session where we actually focus on that. But right now, I'm just going to add the buy stop order. This is going to be about 1.0960 on the Euro USD first. In terms of the sell stop order, it's actually going to be below 1.0925. Okay, you might want to have it a little bit lower just to give it a little bit more room. 1.0920. I'm trying to avoid as much whipsaw as possible because the distance is already about 30 pips as we're talking about on the Euro USD. All right, again, buy stop order at 1.0960, sell stop at 1.0920. Go quickly onto the pound USD. This is actually going to be a little bit tough because we don't actually have the upper range. We can create a sell stop. Unfortunately, I'm not able to create a buy stop because we don't have a resistance that we have right now. Market is not ranging. It's currently kind of pushing a little bit higher right now. You might want to have it about 1.2890 if you want to, just to go up a little bit higher, but we're not in that consolidation phase. So this one here could actually be a little bit dangerous, all right, for the pound USD. Again, pound USD sell stop is actually going to be at 1.2797, just slightly below 1.28. Okay, the dollar Japanese yen also a tough place to be. You don't want to have a buy stop anywhere lower than 148. In terms of a sell stop, this is a 100 pip trade. I do not recommend this at all. If you're worried about your risk in the market, this is a huge risk that you are taking in the market right now. Your sell stop will be below 147, 146.90. All right, let's quick tap. We don't have a lot. We only got about 3 minutes. Gold here again. We can go on the 50 minutes time frame and create a little bit of a range for ourselves if you want to. The buy stop is actually going to be about 2171, 2172, right? About 2172. The sell stop, I want to give it a little bit more room. Maybe want to have it at, just about 2163. Okay, this is still very, very close. Just be mindful of where we are right now. And let's do more. We have a little bit more time. Aussie USD. This one is in a very tight range. Right now, you can have your buy stop a little bit higher here. You can have it about 66.50. In terms of sell stop, you want to have it below about 66.25. Okay, below 66.30 would be okay. 25 is a much better proposition for the Aussie USD, but that's going to give us a kind of a huge range. So about 66.30, that would be okay. So the Aussie USD is in a very tight range as it is. The New Zealand USD, I would prefer to skip New Zealand USD by all means. On the dollar CAD, we can create a little bit of a range. We can have our buy stop a little bit higher, about 1.3460. All right, 59.60, yeah, it would be about there. And in terms of the sell stop, you want to have it below 1.3430. Okay, just below that range there. If you don't want to focus on the number, just look at the chart, find that range that we have there. That's what we are going to work with for tonight. The dollar Swiss, you can actually trade the dollar Swiss as well. This one here is ranging a little bit. 87.75 would be good. All right, numbers is going to get released in about a minute's time, so this is the last trade that we are actually going to place. Sell stop about 87.50. You want to give it a little bit more room, right? Push this a little bit higher, 87.75, 87.50 for dollar Swiss. Let's go on to the news here. This is going to get released now. Any moment right now, and I haven't had the time to look at the chat. There's a lot of stuff to talk to, but I'll definitely be looking at that once we sort out our positions for tonight. So all the trades are there. There's a lot of trades that were being placed right now. Hopefully we didn't get a whipsaw, but let me just dissect the number as soon as it's released. Okay. All right. We got sell on the dollar Canadian gold. We have a buy. All right, so I think we are up and running. NFP number is 275,000, higher than 200,000. Unemployment rate, the worst case scenario happened. It's now at 3.9%, which is not good for the US dollar. So be mindful. The unemployment rate has gone up. This is actually the worst potential scenario that could happen. Really worried about this, and there's a little bit of a confusion going on in the market. So we have the Euro USD triggered, Aussie USD triggered. Those are sell stop. It should be a buy stop that's triggered for the Euro USD. The unemployment rate is not great at all. Dollar CAD, dollar Swiss, we had a buy. I think it should be a sell, but we'll see how it goes. I need to cancel the dollar CAD. I need to cancel the dollar Swiss. Dollar yen still safe. Gold has been triggered for a sell. We didn't move much as of yet, but the unemployment rate at 3.9% is not great at all. This is probably the worst case scenario, and this would actually make things a little bit difficult because that's actually going to be bad for the US dollar itself. All right, so I think the Euro USD should be a buy. So for the Pound USD, I'm actually going to close out my sell stop, but we'll leave it there. It should be triggered anytime soon anyway. I should be a little bit more on the buy side. It's weak for the US dollar. That's all I can say, right? The NFP number is higher. Previous number, which is at 353,000, it is now revised down to 229,000, just to give you that number there. So there's a little bit of a revision. It's now revised to 229,000 last month. We have 275,000, which is higher than consensus, and also an increase from last month. However, this is the worst possible case. Unemployment rate has gone up to 3.9%, which is probably not that great for the US dollar itself. Okay. Yeah, so as I say, this is probably the worst case scenario. And we can look at the current condition here. We're not actually moving too much except for the euro. Gold is not that bad at all. I wouldn't say it's actually pretty bad. It's just that I have a smaller lot at 0.01. But counting the lot sizes, this is actually a pretty bad night, right? If it's done at the correct lot size, I would be down about 3,000, which is not great at all. The Pound USD, it's not triggered, so I would actually close the Pound USD. There's no point in hanging on to those. The dollar Japanese yen, in terms of the buy stop, it's not triggered. The sell stop was triggered. So again, this is the worst possible scenario for the US dollar itself. But we'll see how it is. Gold just spiked up, right? If you are trading, if you got buy on gold, it'll be great. But again, the NFP number was great, but the unemployment rate is the worst possible scenario we have at 3.9%. Okay, which is not great at all. Yeah, NFP was revised. All right, let me go through the chats here. I haven't had the time to look at the chat, so I'm going to go through the chat while we look at the trades here. Again, we might see a little bit of a whipsaw, so we might actually look at a potential fade to happen. If we have a potential fade and you have a running position and it's not in your favor, I would prefer to close it out as soon as there's a potential fade in the market. Okay. I'm gonna go through the chat there. Signal posted in space valid. I don't post any signal in space, so I don't know what you're talking about. Buy now. TP might be 2080 or 2200 above, possible. Yeah, above 2200 is actually going to be a little bit tough. Trash, I just lost 3K. Thank you. We put out a risk disclaimer. If you don't understand what you're doing, you shouldn't actually be jumping on these trades anyway, because there are actually going to be risks involved. All right, so hopefully that answers it. But we want to go back here a little bit, and I want to do a little bit of a fade, right? So if you go through what could potentially happen, we actually could wait for price to kind of pull back to pre-NFP release. Right, so we're looking at the market here. We actually do see a little bit of a spike, but we're not looking at a huge movement here, because on the Euro USD, the movement that we have here, even with the Euro USD triggered on a sell stop, it's only about 30 pips, so it's not actually huge, right? So we'll go through the numbers here. But the whole thing is, we typically look for a potential fate to happen. Hopefully, we're actually going to get that tonight. So we'll see how it is, so we can actually start adjusting into our position. But let's review the market and see what happens. Let me go through this. In terms of the Euro USD itself, it is actually not pretty bad. It's at 200 and so here we're looking at about minus 25 pips, right? It's not that bad. The rest at 0.01, we're looking at $3. That's actually going to be about 30 pips as well. So about 30 pips, about 16 pips of movement on the dollar Canadian, the dollar Swiss about 30 pips, the dollar Japanese yen pretty much not huge at all. The number's actually not that bad. It's only about 10 pips ish. Even for gold, if we take a look at the push here on a 15 minutes time frame, it's actually just about $10. It's not that extreme. So I know it looks kind of extreme on the early time frame, but if we kind of zoom out onto the daily time frame, it is not that extreme. So let me load up Trading View so I can give you a little bit of a calculation as well. But yeah, so very briefly, we can take a look at what's going on. Especially, let's focus on the Euro USD kind of as the benchmark for a lot of things. I definitely want to take a look at gold as well. So this one here, obviously we have surpassed 1.0850, 1.09 yesterday. It kind of pushed up higher. We do have a little bit of resistance, 1.0950, but above there, there's also going to be 1.1 as well. So this is pre-market movement. This is basically what happened. This is basically a whipsaw. No matter what it is, if you have your buy stop trigger or sell stop triggered, no matter what it is, if you don't cancel the other order, you would have both of the orders triggered. So we are kind of back within that range itself. So be mindful. We're not looking at a huge movement here in the market. It's only about 30 pips of movement in terms of the range itself. We're now back within the range. So can we still make a decision into our trades? Can we still make changes into our trades? Right now, I really want to break down the numbers themselves. So let's take a look at the numbers, and I'll go through some of the stuff here. Participation rate is at 62.5%. We actually don't see any major changes. Let's take a look at the average hourly earnings. We have a huge drop from 0.5% to 0.1%. So in terms of the CPI number that's actually going to be released on Tuesday, it might actually come in a little bit lower, but we haven't looked at the consensus. We'll take a look at that on Tuesday. The average hourly earnings year on year, it's pretty much stable, but it has come down from 4.4% to 4.3%. So this is the annualized number. The number is not great at all. Okay, and this is my major concern. And this, as I said, no matter what the NFP number is, it can be higher than what the consensus is. As long as the unemployment rate shows up higher than 3.7%, that's actually going to disrupt a lot of stuff. So looking at this, what is the market's momentum at this point in time? Obviously, looking at a weaker US dollar. Okay, so if you had the chance to adjust your trades, I would say adjust it. Right now, we don't actually see a lot of movement as of yet, but I would prefer to cut your losses. I'll be honest, I think this is the first time I've ever stated I would prefer to cut losses at this point in time. If you don't want to cut your losses, if you have a open position, you can have your stop loss for Euro USD about 1.10, right? But that's about halfway there. So is it worth it? Probably not. Okay. So I would prefer to cut losses where possible. Focusing on gold, especially because this one here could be damaging you guys. Can this one push higher than 2200? It might. Okay, just on the back of the consideration that the hourly earnings has dropped down, that could actually signal a potential drop in the inflation numbers as well. Okay, so this is all in a bad position. I wouldn't be going long Aussie USD at this point in time. I wouldn't be going short Aussie USD, Euro USD. I wouldn't be going long the Canadian dollar Swiss. Dollar yen, this one here is all right. It's on the sell side. Gold here is also not looking great either. So if you can, cut your losses. If you want, you can wait for the fate to happen. We can wait for that in the next 15 to 20 minutes, right? Before the hourly candle close, we might get a little bit of a fade. We might see a little bit of profit taking happening in the market as well. So we are waiting for that fade to happen. And again, if that fade happens, I would prefer to close out any position that is pro US dollar at this point in time. The unemployment rate at 3.9%, it's just really, really bad. Yeah, news trading is pretty risky, but no one complains when we did good for the past few months. So yeah, it's just part of live trading anyway. Now after NFP, what happens? After the NFP, I just give you the explanation on the number 3.9% on the unemployment rate. It's bad, right? I don't care what the NFP number is. We have a revision, downward revision from the previous number, which is the January number. 353,000 revised down to 229,000, which is already kind of bad. And then the NFP gains to 275,000. It's kind of meaningless because the unemployment rate also jumped up from 3.7 to 3.9%. It might be, we could actually salvage this if it's at 3.8%, but 3.9% is actually going to be really tough. I'll be honest with you, I don't think we can actually wait for a fade to happen. Current scenario, I would seriously just flip the trade. I'll be honest with you. I would close this and kind of flip the trade. It's actually going to be much better. But just in case, if you want to have your stop loss there, you kind of like, okay, I'm looking at Euro USD as a potential short. You can have your stop loss at 1.1, but I can assure you, if price goes anywhere near 1.1, it's likely going to trigger and hit 1.1. We're probably not going to be looking at a reversal until we see price move above 1.1 and then comes back down. Okay. So any rejection at 1.1, we'll see price move above 1.1. So that's something to consider as well for tonight. Okay, this is not looking good. I'm actually going to close out on Aussie USD or USD, dollar Canadian, buy, dollar Swiss buy. I'll leave the sell on the dollar Japanese yen. Gold, definitely want to close out. So not great at all for tonight. It's actually pretty bad. Right, the dollar Japanese yen. What can we talk about the dollar Japanese yen? Is this one here okay to continue shorting, or do we have a specific target for the dollar Japanese yen? For the dollar Japanese yen, I actually do have a specific target. Definitely not going to be targeting anywhere lower than 145.90 at this point in time. That's kind of the best way to get out from the dollar Japanese yen. And I'll give you the logic for the dollar Japanese yen. And this is what the dollar Japanese yen looks like. We do have a little bit of a final support at 146 to 145. So if you want to take your target for the dollar Japanese yen, I would go for anywhere between 145 and 146. Now, there were a potential hidden bullish divergence that could actually happen on the dollar Japanese yen, but this kind of really hinges on whether or not price breaks below 146. Because if price breaks below 146, there are no hidden divergences. We're looking at the final support for the dollar Japanese yen 145 to 146. But 145, 146 are potential levels where people actually might exit their dollar yen position if they were shorting it from up top in terms of the dollar Japanese yen. All right. So that's for the dollar Japanese yen. So again, let's focus on the Euro USD. I'm not looking at any signs for this one weakening at all. This is again a fundamental that we have. Is going to be hard to go against. We might see a little bit of profit taking happening, but to see a major reversal on the US dollar strengthening, I don't think that's actually possible for tonight. The unemployment rate is just too high, and the NFP numbers, even though it's above consensus, doesn't mean anything because we have a previous revision from 353,000 to 229,000. That's not going to help the numbers at all. Okay. Dollar yen welcome 145. Can it go higher? I mean, the dollar has been weak for the past days, like really, really fast. Can it go higher? I'm concerned as well because we're dealing with a market context in a market where it's kind of at all-time highs, right? We haven't even discussed what could actually potentially happen with the US market once it opens. But Nasdaq is obviously pushing up higher. We're potentially looking at a move towards 18,500. That could actually happen. Again, obviously, the context of this, we're not looking at the stock market as kind of the versus dollars trade, because it kind of works differently. If the unemployment rate is high, that could affect businesses as well. Obviously, that would have a different impact on the stock market. So again, the stock market is definitely something that we need to consider as well. There are huge divergences being developed in the stock market, but this is currently still pushing up for a new high. But yeah, I think a lot of people are actually going to be looking at gold tonight and see if this is actually going to push above 2200. I kind of doubt that it's actually going to push above 2200, but again, we are at the level where people might actually be afraid to hold on to the position. So what I would want to say, be a little bit more cautious, because in the month of March, we typically see a lot of position adjustments that happen in the month of March, especially in the Asian market. So just keep that in mind. And also considering where we are on the market, most of us, most of the stuff that we have here, we have a little bit of a risk assets rally. A lot of them are at all-time highs. That could be a little bit of a pop or kind of a burst in a bubble, I would say. Might be profit taking. Market has rallied up really high. As the further it goes, the faster it goes. The higher so the greater the fear in the market is. So just bear that in mind. Okay. So with higher unemployment, so will it be hard for Fed to cut rates? No, this is something they need to consider, because on the 20th meeting, it might actually change. They might actually change their tone depending on the inflation number. So how does this play out with the FOMC meeting? Obviously, if the unemployment rate goes higher and it continues to go higher, a few things that we need to consider about, and I mentioned this earlier at the before the NFP numbers was released, is that we are at the peak of the economic cycle, and the first sign for the peak to kind of fizzle out is when we have a drop in GDP numbers, a drop in inflation, and an increase in unemployment rate. So we're actually looking at two other stuff here. We are looking at a potential increase in unemployment rate, a drop in inflation number. Obviously, the final trigger is definitely the GDP numbers. Once all three are triggered, we are going to be in a phase where the economic contraction is going to happen, and that is borderlining a potential recession. So we need to be mindful on what it is. Okay. So with higher unemployment rates, will Fed cut interest rate? Yeah, they need to, because if they don't cut rates, unemployment could continue to go up. And businesses are obviously trying to cut costs, and if the borrowing rates are high, then yeah, they might actually have to cut more people. Unemployment rate could go up. That could actually be a hard landing for the U.S. economy. So this is something that the FOMC has to consider as well. Should they be relaxing their monetary policy? This is, I think, the first foray into that. If the unemployment rate next month jumps up to about 4%, then it's starting to create a little bit of a problem. In terms of limit, we probably be looking at about 4.5 to 5%. Yeah. So is now gold a sell position? I don't think it's now time to kind of start selling gold as of yet. I don't think this has fizzled out. It might see a little bit of a fade. We could see a little bit of a fade. If you want to go short for gold here, it's actually not a bad trade at all. So if we want to go focusing on gold, this is actually something that we might actually do a little bit of a fade, but it's more on the 15 minutes time frame. So if you're thinking, you might actually go short right now. If you want to, just make sure your stop losses are nowhere above 2186. So make sure you have that in mind. In terms of target level, where should you be aiming for? I wouldn't go any lower than 2170. This is still going to give us a good risk reward ratio. So if you want to fade the market right now, I think you can fade gold. I think you can fade gold right now. If you want to, the risk is actually pretty small. Euro USD, I'm not quite sure if you can actually start fading this, but if you want to take your chances, we do have a stop loss on a fade for the Euro USD, which is going to be at I'll go with 1.09 at this point in time, or the highest you can go is probably just 1.1, but that's so far away, which is considering the range. We're not aiming for that low here. We're probably just going to be aiming for a little bit of a return towards 1.0950. So 1-to-1 risk reward ratio is probably going to be your best bet if you want to start fading this. At least you should be able to recoup some of the losses that we had right now. But yeah, we're kind of looking at a potential fade. I like gold as a fade. The pound USD, we actually haven't triggered any trade for the pound USD. It's going to be really tough to trade the pound USD because the key levels for the pound USD, I think we have surpassed that on the daily time frame for a lot of them. So we have surpassed 1.2850. We obviously clear off a lot of the stuff here. We do have a little bit of a psychological resistance at 1.29, but this is going to be tough to say, all right, there's going to be that resistance at 1.29. So not too keen on shorting the pound USD, the euro USD, and gold. I'm okay because gold might fall quicker than what the market is anticipating. The dollar Japanese yen. If you guys know my history with the dollar Japanese yen, and as a disclaimer, I don't go short dollar Japanese yen. I have a long position in dollar Japanese yen, a lot of them, and I have a different purpose to that. It's more of a long-term investment rather than a short-term trade on the dollar Japanese yen. So obviously thoughts are going to be conflicted, but if we take a look at the dollar Japanese yen, all I can warn you is that we still have a potential hidden bullish divergence for as long as price does not touch 146. So if we didn't see price going to 146, then yeah, there might actually be a hidden bullish divergence for the dollar Japanese yen. How much time is needed to set the NFP news to be stable? After news releases, we typically look to about 15 minutes, I would say, for it to start being a little bit stable. But if you really want everything to die down, I would say 2 hours. But that's pretty much it. Is it a good practice to cut loss when we see price reverses to draw DD after triggering the buy step? DD is... Yeah, look, cutting loss, I think it's an okay decision because I'll give you the logic right now, David, on this one here. I would prefer to always be in control, right? If I know things are not going well for me, and look, just reading processing the fundamental releases, it just doesn't click. It will never click that we are actually going to be looking at a potentially stronger US dollar that's going to break through above the range before the market, right? So you have two things that you're able to do: cut your losses, or set your stop loss, let it hit, don't change it. All right, we haven't set our stop loss, so we have to do it manually. The worst thing that you can do is actually hope for a potential fade in market or potential reversal in the market. That's the worst thing that you can do as a trader. So I would go with either setting up your stop losses, or you're willing to cut it manually, right? If you're willing to cut your losses manually, I think that would be okay. All right, oil. Did you get out on 80 for oil, Chucks? Can you please explain pairs to trade in recession? Depending on the recession itself, but we're not really saying recession. But typically, when we look at economic contraction in the market, it's really associated with a recession or at least a crash in the market. So I'm super concerned with the market as it is, and especially the U.S. stock market. It's definitely a huge concern. Nasdaq is obviously pushing higher, and the concern that I have is that we have a developing divergence, constant regular class A bearish divergence on Nasdaq, US 30, S&P 500. So I'll be honest with you, enjoy it while it lasts. But this is a ticking time bomb. A lot of investors are actually getting really nervous about this. We don't actually like holding a position for long here. Every day we're kind of monitoring the equity market very, very closely. So if you don't know yet, if you're using the MT5, you can actually trade the stock market. If you don't know that, you can actually trade Apple, Nvidia as well. And if you don't know what Nvidia is about to surpass Apple in terms of market cap size. So definitely something to consider as well. Yeah, let's take a look at Aussie USD, but I'll answer on this one here. Last trading session hasn't set any stop loss rightfully. Where should stop loss be set? For instance, the Euro USD. The rightful stop loss is actually the opposite of the stop loss. So if you have a sell stop down here, the stop loss is actually at the buy stop. It's just that during this session, I have to kind of control a lot of the trades here. I'm not able to kind of manually drag the stop loss until the trades are triggered. So if you have your trades triggered, immediately take the other range where we have the other stop orders to be your stop loss. That should be the way it is. Should we keep stop loss for the dollar Japanese yen? The dollar Japanese yen, in terms of the stop loss, if you have a sell position on the dollar Japanese yen, you don't want to have it any higher than 147.50. That's where your stop loss is. Okay, because reversal above 147.50, we're likely going to punch through above 148. 15 minutes on the Euro Japanese yen. There's a double bottom. Can we buy? If we take a look at the Euro Japanese yen, I haven't taken a look at the Aussie USD for Chucks, but I'll take a look at the Aussie USD soon. But let me just consider the Euro Japanese yen. So Euro Japanese yen again. If you take a look at the consideration on the Euro Japanese yen, just on the daily time frame here, we do have a little bit of support because that's where the 50% is located. All right. So if we go into the hourly time frame, this is technically not a double bottom per se, but there's actually a little bit of an order block being built up here, and this is actually the order block for the Euro Japanese yen. So if you go by the 15-minute time frame, obviously that's going to be the short-term order block. If you want to go on the 15-minute time frame, if you go onto the hourly time frame, can that work as a little bit of an order block? Yes. Technically, that would actually fall about 160.75. So depending on how you look at key levels, but a lot of traders are going to be looking at it from a psychological perspective. That's going to be 160.75. So if you're thinking, can I buy Euro Yen? You can. And I don't mind risking this much. But yeah, in terms of stop loss, you definitely want to have it below 160.60, right? So you probably go for about 160.50. 5-ish, right? About 40 pips of stop losses. And where should you target the Euro Japanese yen? That's obviously going to be the point of discussion, right? Always go for the 61.8% where possible, and that's going to put us to about 161.50 if you want to go long on the Euro Japanese yen. I don't mind the risk at all. And, in thinking about going short the Euro Yen, going short the Sterling Yen, or going short whatever it is, I typically don't buy the Japanese Yen, i.e. I don't want to short the Euro Yen, Sterling Yen, and the dollar Japanese Yen just because fundamental differentials between monetary policy, it's still in favor against all the other nations versus the Japanese yen itself. All right, looks like fade, but I don't like it because faded both sides. Yeah, it's a little bit of a whipsaw. If we didn't manage it right, doesn't matter what it is. End of the day, if we leave our stop orders, both sides are gonna get triggered. It's not a super great day either. Should I keep a stop loss on the short? Yeah, you still need to keep a stop loss on the short, most definitely. Wouldn't go trading without a stop loss, right? But all I can say is you break about 147.50, that's actually going to punch 148. That's all I can say. So your stop losses, I would go with 147.50. All right, so yeah, good enough that we actually see a little bit of a reversal happening right now. But again, I'm not gonna be crazily targeting a range that's like, oh yeah, somewhere here about 1.09. I'm not taking my chances on that. I would go with pre NFP numbers as the fate, how far we can fade that. But yeah, that's as far as I would be willing to go. Right, so if you go by the lot size, obviously what you're looking at here, it seems like I just recouped the losses for tonight. So does that mean so? No, because the other trades was open at a smaller lot size because I didn't adjust that up top. So it's actually not a fair representation. Did I recoup maybe about 1/3 of the losses? I would think so, yeah. But do I recoup everything? No. No, it's still a damage trade. Unfortunately, it looks like we just recoup everything. No, I'll be fair. No, there was a little bit of a problem in terms of the lot size. It's at 0.01 for some of the trades that we triggered, like the Aussie, dollar Canadian, dollar Swiss. It's at 0.01, so it's not a fair representation for that. Gold just now was also at 0.01, so we just sit with 1. Okay, all right, time's up. Hourly is close. I think we want to get out from the position. If you want to stay, stay. But I would get out with whatever fade that we can get. Now, considering that the market has faded back, we're going to go over time a little bit because I can talk about the fade right now. The market has faded to the initial level, the pre-market level. At least for gold, the Euro USD, not so much, right? But we're still looking at about 55 to 50 as a potential area for that. Let's see if I can have, no, I haven't adjusted this at all, but if we blocked it, the pre-market is pretty much at 1.0950. So if you want to buy the euro right now, you could attempt it, all right? But I just want to clarify a few things. If you want to buy the euro right now, the stop loss that you have, I'm not gonna trigger that trade right now because I don't want to have that misconception that I'm telling you to just go reverse on what we have. But if you want to buy the euro, all I can say is your stop loss is actually going to be pretty far down here. Is that going to be problematic? It's actually only about 45 pips. Target wise, you are going to be looking at 1.1. Is that going to give you about 1-to-1 risk reward ratio? Probably not. That's the problem that I have with the trade right now. Unless you're aiming for a break above 1.10, then you can aim for 1.02, 1.1025. That would make it more than 1-to-1 risk reward ratio. But yeah, I think the fade has pretty much ended. If you want to continue in terms of the fundamentals, just let me warn you, because I really hate it when people jump in and try to trade and then, they maybe open up too big or whatever, they had losses and they just kind of blame it on us. Everyone is at their own risk. I'm just going to clarify this for you. Today's Friday. Okay? And with Friday, there are going to be position adjustments. So just keep that in mind if the market doesn't go in your favor, especially the post NFP numbers. But if you're thinking, I'm not worried about it because I'm looking at it from a longer term perspective, then yeah, by all means, have a swing trade if you want to, because the fundamental doesn't change. That the US unemployment is now at 3.9%. Again, that's the worst possible scenario for the US dollar. We just got that. It trumps any of the NFP readings. We don't quite care about the NFP numbers at all, right? It's still a positive job gains in the market, but the unemployment rate just jumped up 0.2%. That's bad for the US economy. All right. So in summary, in terms of the NFP trading strategy, obviously the strategy that we use are going to be based on two pending orders, which is the stop and the buy orders. You can also trade before the data is released. You can trade after the data is released. We just gave you some of the example there, or the potential fade, and we just close out the fade. And we want to see the market continue to lead up to the actual NFP numbers. Sorry, the actual unemployment rate that was actually high. That's going to be bad for the US dollar. Okay. All right, so again, the code is Nonfarm 2024 if you want to use it to double your deposit bonus. Otherwise, we might actually have a little bit of a Q&A session if you want to. Okay. Okay, how does revisions affect trading the news? Okay, so let's bring up the revisions that we have here. I'm not sure if I can show it here. See if it shows up here. All right, the revision hasn't shown up here. Let me just bring up Forex Factory as well, see if the revision comes up. All right, so I want to point out to the revision here. This is a revision. So the previous number was high, right? As I say, the probability of this achieving above 300,000 again for 3 months consecutive, it's probably not going to be right. A revision is kind of expected, I'll be honest with you, because the number was just too high for January. So last month, when we did our NFP on February, that was a number for January. The number for January has been revised down from 353,000 to 229,000, which is bad because market has basically priced in that 353,000. All of a sudden, it's revised down. So the market has to take away that revision. And the saving grace is, at the very least, a market was having a consensus about 200,000. It popped out at 275,000. 275,000 is still a much higher gain than last month, even if it's revised down. Okay? So it kind of balanced out the NFP numbers. It's actually neutralizing the NFP numbers. The problem, as I said, is the concern on the unemployment rate. This has jumped up to 3.9%, and we don't have a revision on the previous month's numbers. So this is the problem for the US economy at this point in time. So revision does have a huge impact into the news, but the problem with revision, a lot of traders that don't understand how to read the fundamental news don't quite understand it. So a lot of them kind of ignore it. But obviously, the much larger investors know that there's going to be a revision. The revised number is actually going to be released, right? But the revision is obviously not going to be the focus for a lot of traders, because a lot of traders just look at the initial release and they thought, oh, consensus 200,000, number released 275,000. If you're just focusing on the NFP number, you would be buying the US dollar, and you would be in a loss. You would be in a losing position, right? And this is why I say the NFP number is not just about the NFP numbers. Maybe next month we want to title it differently, the US employment numbers, right? Because there's a lot of factors involved. It's not just the NFE numbers. We need to take a look at the unemployment rate. We need to take a look at the average hourly earnings, right? So it's just never the NFE numbers. So if you just focus on the NFE numbers, I can assure you, everyone that trades just basing it on the NFE numbers just got screwed by the market. All right? Is it anyone's fault? No, it's probably just their fault that they don't understand how the fundamental works. And you're not supposed to just look at the NFP numbers. You need to look at that number in combination with the unemployment rate. Okay, and that's basically it. So that's the same answer that I could give in terms of the revision as well. Is the CPI as high impact as the NFP? I would probably much more. Right now, in terms of the context on how the market is expecting the FOMC to cut interest rate, inflation, it's a much bigger factor right now. See, that's nice. At least someone is profiting, right? Instead of calling me trash or whatever. But yeah, look, there are gonna be risks involved, right? But I'll be honest, I don't think we've been doing this since April last year, right? It's been 11 months. I don't think there's actually more than 20 people that say thank you in the chat when they're profitable. But yeah, it is what it is. If we conduct live trading, we just want to be as honest as it is. Sometimes it works, sometimes it don't. It doesn't work, right? Nothing is perfect. There's always going to be risk in the market. If you don't understand the risk, obviously it's not nice calling people trash. We're here to help. But yeah, and it's a little bit of a tidbit, I do feel appreciated. Thanks, Okonu, on the thank you. Really love to hear that as well. I don't trade the NFP numbers. CPI is better. Yeah, it's just part of it. Some people like news trading, some people don't. But the CPI has a much meaningful impact. Yeah, with the CPI, typically we don't actually see a little bit of a fade. We either see market just rocket up or crash down. That's pretty much it. Yeah, I think we've been doing great. It's just that it's kind of hurtful sometimes, but it is what it is. It's part of my job, so it's not a big deal at all. Right. But yeah, thanks for the support, guys. I think if you have any questions, I'm more than happy to answer it. If not, we can wrap it up for tonight. No, I'm not too concerned about the comment. It's I'm just saying that reality of the matter is it's kind of part of my job. People kind of tend to forget you when they're profitable. See the Orient at 146. I'll see you at 146. Even 145. I'm happy for dollar yen to go all the way down there because it's going to be a cheaper price for me to pick up. But yeah, any questions so far? Let me know. If not, what's next? On Monday, we are going to conduct our news trading theory and practice. Again, it's a good training ground, right? Especially if you are new and you're not quite sure about the stop orders and the sell orders, the buy stop and the sell stop that we do. And there's obviously the limit orders that we actually haven't even employed tonight. We should be employing it tonight, but yeah, we just didn't even have the time to employ it. But again, we want to talk about some of the advantages and disadvantages to news trading. So if you like here and thinking, you know what, that's quite risky, probably just jump in on Monday session, go to the theory session. We'll go through some of the advantages and disadvantages so you actually are clear and not just following blindly in terms of our live trades. Okay. So we're going to be looking at some of the most profitable news for trading as well. Obviously, we're going to go through some of the limit orders. I really want you to understand the limit orders, the stop orders, for you to actually be able to use it properly. Yeah, if it goes down 45, divergence broke on the dollar Japanese yen. Yeah, unfortunately. Do I want it to break? Hopefully not, but it is what it is. See what the market reaction is. Thanks, David. Yep. Cool. All right. No questions so far. Let's wrap it up for tonight. Have a fantastic weekend ahead. I'll see you again next week on Monday and Tuesday. Again, this is just the first hurdle. We still got 2 more, 3 more actually this month. The big ones, obviously the CPI on the 12th, and then the FOMC on the 20th. And then at the end of the month, we have the Bank of Japan. They might actually move away from negative interest rates. That's going to shift the market away as well. So yeah, a lot of tough challenges this month. This is starting to get fun. We had a little bit of an easy January and February. It's about time we get serious for 2024. All right. Thank you all. Have a fantastic week.